Hey guys, welcome to this video. Just thought I would run over the euro dollar given you've got quite prolific ECB news later. Don't forget you can join my private trading room. We're going to be live for 3 hours at noon again with myself and my co-trader, co-founder, co-mentor. You can get my free training underneath as well. So the euro dollar is an interesting chart because we really haven't gained or lost value for absolutely ages. Okay, since most central banks went in limbo, you've gone sideways. Particularly as well on your euro dollar, because the ECB and the Fed, they try and align themselves, or the ECB tries to fit more the Fed. They're both very large areas, or they govern very large areas in terms of finance. Particularly today, you've got the ECB rate on deposit facility, you've got the ECB main refinancing operations rate. That's probably one of the most important parts. You've also got the ECB's monetary policy statement, and then an ECB conference. You've got GDP in the US as well. So you've got some good data to go today, and hopefully that's going to move markets because it gives myself and my academy members chances to get in and out. So yeah, you've gone sideways for a significant period of time. Okay, a year now, you've stuck with a range that is mainly fitted, unless you include these highs, 1127 roughly to 1044. Okay, so it's not really that far apart. Had you traded it sideways and traded that range, okay, you could have got considerable gains by now, because all you would have done is short to the upside and long to the downside. Now, I don't believe this is going to last. Okay, I think it's more or less inevitable that you're going to go either way, and I think a lot of that direction may depend on what is said today, and also the US data that is coming out. Okay, so you've got durable goods orders for defense, personal consumption expenditures, core consumption expenditures, various sort of mid-level tag, or orange if you like, amber tag news. Main thing being GDP, but the focus is on the ECB rate on deposit facility, which is the rate at which banks earn interest when they deposit funds with the ECB. You've also got ECB main free financing operations rate. That is basically the interest rate the ECB charges to banks for 1 week long loans. Okay, so very short-term loans. Then, of course, you've got the monetary policy statement, which is going to refer to interest rates and how how they're controlling the flow of money. Essentially, a hawkish view is bullish for the euro, as many of you know, because of course, if they put the rates up, you're going to get better savings rates. Okay, and that looks like it looks really like the summer is when they're going to start bringing them down. Fed looks like they might start earlier. Okay, so you've got this slight bias to the upside, therefore, on your euro. Again, that will be dictated further today by both news in the Eurozone and the US. So having said that, if you know that you've got a very slight uptrend, now it's slight because there isn't a massive difference at this point, okay? There isn't this massive buy the euro, sell the dollar bias. It's just slightly there. So for that reason, if you do end up getting lower, which wouldn't shock me particularly, you may have ideal long entries to the downside, okay? That would take you in line with longer term, higher time frame price action. It would also fit the long-term sentiment bias. We always focus so much on market sentiment within our academy because you have got to know what's going on in the world and how it affects markets. If you don't understand that, you're going to struggle. Because at the end of the day, if you're ignoring what rules currency markets, which is actions of central banks, it's going to be very difficult to make any good decisions. Okay, so you do have traders who trade just on technicals, but you've got, I'm not saying that doesn't work. Largely, I'm a technical trader, but it really helps to put in those biases long term, because if you're trading this to the short side and long term, it's likely to rise based on current market sentiment, then again things are going to get harder. So you would have been fine as a tech trader like this, but ultimately, if you can't handle those moves to the upside with hedging methods like I do, it's going to be very difficult. So in any case, if you do come to the upside, I'm still happy to short it. I'll just do it slightly lighter because I'm aware of the long-term sentiment, macro-wise, and any falls lower in line with where you've previously risen, probably going to be ideal for scaling longs, maybe light ones first, followed by further entries after that. So if you look at the weekly, you can see that because you've got price action here, okay, and price action there. So the latter is a bit better in my opinion. And like I said, it fits with that long-term sentiment. If you were going to short this, really, I would give it a very wide berth if you're risk averse. I would personally prefer it if you can get something up here. All right, so that's going to come in line with your higher 200 MA. And of course, that goes against current market sentiment. All right, so I wouldn't be surprised at all if ultimately you get to that point and beyond it, but I think it's going to take time. If you look at your monthly, you can get a better long-term view, but you can see there's rejection here already. Okay, so it may be the case that this fires up from where we are. We'll just have to see. But in any case, if it does get lower, it's ideal for longs, in my opinion, and I wouldn't mind scaling into the upside. I think you should experience a further rebound off from this enormous fall here, okay? Because we all remember that people, it became less about savings rates, to be honest, and people just found safety in the US dollar and the US economy. And they still treat the dollar like that to some extent now, okay? The retracement you saw was not significant, really. I mean, you came just over, it came about 61.8, so it's reasonably significant. But if you look at the last retracement, okay, it's much higher, near 88. And generally speaking, it is, apart from when you fell like just in a massive tumble around here, okay, Brexit time. So anyhow, long biased, I would say, on the euro dollar for me, but it was going to have to fall lower. I really like this tech zone here, okay, and I like the tech zone mentioned above, which comes, okay, so accurately, long tech zones, I guess, are here. That's my long bias. But like I said, you would need a fall. Anything to the upside, I would like to be short. Otherwise, if you're risk averse, you really need to give it some room to do its thing. But let's see what happens in the news. Like I said, we cover markets for 3 hours a day, live on charts, teaching our own method to handle all entries, exits with our full strategy. You can get that underneath as well as my free training if you're new. Thanks for watching, guys. Hope that helps as always. Don't forget to follow me on TradingView, and I'll see you in the next one.